Hello everyone, I'm your trusted friend and guide, and today I'm going to talk about a very important and timely topic. This topic is about the recent massive decline in the cryptocurrency market. Friends, if you invest in crypto or have an interest in it, you've definitely noticed over the past few weeks that the market has been going through quite a storm. Bitcoin, Ethereum, and numerous altcoins have seen heavy losses. In today's video, I'll explain in detail what actually happened in the crypto market. Why did this massive drop occur? Which factors triggered this crash? What are the experts saying? And most importantly, what should investors do now? So friends, stay with me through this entire video because today I'm going to answer all your questions. And yes, if you find this video informative, please like it and share it with your friends who are interested in crypto. Current market situation, Bitcoin's status. So friends, let's first talk about the current situation. Bitcoin's price fell to $89,420, which is approximately $79,000 on Monday. This number might not seem too shocking at first, but when I tell you that this is 28.57% lower than the record high of $126,000 in February 2025, you'll understand how serious the situation is. Friends, think about it. A cryptocurrency that was at a height of $126,000 just a few months ago has now fallen by almost 30%. This isn't a small correction. This is a major market crash. In the last 24 hours, Bitcoin saw a 1.3% drop, in the last 7 days a 14.44% decline, and in 1 month a 13.5% decrease. These numbers clearly show that this downtrend is not a temporary phenomenon. Overall market picture. Now let's talk about the entire crypto market. The total crypto market cap has come down to $3.12 trillion, which is equivalent to November 2024 levels. This means, friends, the entire 12 months of growth has been practically wiped out. In the last 7 days, the market cap has fallen by about 14%. This is a loss of trillions of dollars in just 1 week. Other cryptocurrencies condition. Bitcoin is just the beginning, friends. Ethereum has fallen 14.2% in the past week and 22% in the past month. Its current price is $2,933. Looking at other major cryptocurrencies, BNB is down 26%, Cardano, ADA, is down 15.71%. Dogecoin has fallen 17%, XRP is down 7.36%. Friends, this is practically a meltdown of the entire crypto ecosystem. No cryptocurrency has been spared from this crash. Major reasons behind the crash. Now comes the most important question. What actually happened? Why did such a massive drop occur? Let me tell you the main reasons. 1. Massive ETF outflows. Friends, the biggest reason for the decline in the crypto market is the heavy outflows from US-based crypto ETFs. ETFs, or exchange-traded funds, these are funds that institutional investors, meaning big companies and financial institutions, use to invest in crypto. In the last 7 days, net inflow has been negative, and since November 1st, this negative inflow has been continuous. On Monday, the inflow was negative $94,000. This means big players are pulling money out of the market, and when big money exits, prices naturally fall. 2. Weakness in technical indicators. Experts say that falling below the 200-day moving average and failing to break above the 50-day moving average is causing weakness in the market. Now, these technical terms might sound a bit complicated, but in simple language, these indicators show what the market trend is like. And right now, all these indicators are giving bearish signals. 3. Short positioning by large investors. Experts say that ETF outflows, short positioning by large investors, and weak sentiment have caused the heavy decline in the crypto market. Short positioning means that big traders are betting that prices will go even lower, and when this happens, it becomes a self-fulfilling prophecy. 4. Profit booking friends. Also remember that people who invested in crypto in the early stages are now booking profits. When Bitcoin was at $126,000, many investors must have thought this was a good time to take some profits. 5. Macroeconomic factors. The stock market decline has also spread to the crypto ecosystem, creating panic among investors. Tough talk from central bankers and reduced expectations for interest rate cuts have pushed investors away from risky assets like cryptocurrencies. 6. Unwinding of leverage trading. The expiry of $4.7 billion in crypto options made trading volumes worse and deepened the crypto market crash. Liquidations pushed prices down, which triggered more liquidations. A vicious cycle. Historical context and past crashes. Friends, now I want to give you a bit of historical perspective because it's very important to understand that volatility in the crypto market is nothing new. Past crypto crashes. In 2018, there was a very big cryptocurrency crash. Between January 2018 and September 2018, cryptocurrencies fell by up to 80% from their peak. This was even worse than the dot-com bubble's 78% collapse. In 2021, we also saw heavy volatility. In April, Bitcoin was above $64,000, but by April 23rd, it had fallen below $49,000, a 23% drop in just 10 days. What's the common pattern? Economic analysis shows that cryptocurrency price dynamics display characteristics of speculative bubbles, which are driven more by market sentiment than traditional economic fundamentals. This means, friends, in the crypto market, prices are largely driven by emotions, fear and greed, and this is why we see so much volatility. Recovery possibilities. But here's an interesting point. Historically, those who held their investments during downturns were rewarded with substantial gains when the market recovered. Bitcoin has crashed many times, but each time it has risen again. This is important to remember. Expert analysis and market sentiment. Current market sentiment. The crypto market fear and greed index has slipped to 15 in extreme fear. This indicator shows how much fear or greed is in the market, and right now there's an atmosphere of extreme fear. This can be viewed in two ways. 1. Investing now is risky because sentiment is very negative. 2. Or this could be a buying opportunity because the buy when others are fearful principle applies here. Expert predictions. JPMorgan sees Bitcoin's support level at $94,000. This means if Bitcoin goes below this, there could be further decline. 10x research says that clues about Bitcoin's latest drop were visible weeks ago. The buyers who used to support every dip have suddenly disappeared. Long-term perspective. Some analysts argue that 2025 is the first year where the usual pattern of bull run, strong downturn, long recovery is changing. Bitcoin remains above $100,000, surprisingly with low volatility, almost 2 years after the 2024 halving. This could be a positive sign. Industry impact. The impact of this crash isn't limited to just prices. Prominent companies like DAppRadar have also announced shutdowns, blaming the current environment. This shows that this crash isn't just price movement. It's affecting the entire crypto ecosystem, investment strategy, and safety tips. Now, the most important part, what should you do? I want to share some practical tips with you. 1. Don't panic! The first and most important advice, don't make any decisions in panic. When you're highly emotional, it's very difficult to make rational, responsible decisions. 2. Portfolio diversification. The diversification strategy is to evenly distribute your funds across different assets. If one asset's value falls, the gains or stability of other investments can offset your losses. Not just in crypto, but maintain diversification in your overall portfolio as well. 3. Only invest what you can afford to lose. Investors should only put as much money into cryptocurrencies as they're prepared to lose in a worst-case scenario. This is very crucial. Crypto is very volatile, so don't invest your life savings or emergency fund here. Fear. Dollar cost averaging. In dollar cost averaging, instead of investing everything at once, you keep investing a fixed amount on a regular basis. With this strategy, your cost basis becomes an average over an extended period, not the price on any particular day. 5. Focus on fundamentals. Instead of chasing hype, focus on assets that have long-term value. Projects with solid fundamentals, proven track records, and real-world use cases. Investing in established cryptocurrencies like Bitcoin and Ethereum is generally safer compared to new, untested tokens. 6. Stay informed. Staying updated is crucial for making informed decisions. Keep reading regularly about market movements, security best practices, and long-term investment strategies. 7. Avoid FOMO, fear of missing out. Don't jump in when prices skyrocket or when you see massive gains on social media. By the time a token is trending, the best opportunities have usually already passed. 8. Consider this a buying opportunity. Some experts believe the current situation can be viewed as an advantageous time for strategic purchases. When prices are low, you can buy cryptocurrencies at a discount. But only do this when you've done proper research and can afford the risk. Future outlook. Short-term outlook. Honestly speaking, the market could remain more volatile in the short term. If ETF outflows continue and real yields keep rising, a deeper correction to the $60,000–$85,000 range is possible. Experts are predicting that crypto prices could fall further, so if you're thinking of investing, be patient. Medium to long-term outlook. But from a long-term perspective, if geopolitical tensions ease and economic indicators improve, investor confidence could return, which could bring a rebound in prices. Technological advancements and increasing adoption of cryptocurrencies could give the market a positive boost. Recovery indicators. Some things that will indicate recovery. Stabilization of ETF inflows. Improvement in market sentiment. Technical indicators turning bullish. Regulatory clarity. Bitcoin versus Ethereum. Outlook. Bitcoin's future price performance will depend on its adoption as a global currency and its popularity as an inflation hedge. Ethereum's future price performance will depend more on the popularity of the Ethereum network and growth in dApps and smart contracts. Regulatory developments. Regulatory developments will play a crucial role in shaping the future of the crypto market. If governments introduce clear and favorable regulations, this could be very positive for the market. Conclusion. So friends, this was a complete analysis of the crypto market crash. Let's quickly recap the main points. What happened? Bitcoin down 28% from record high. Total market cap lost 12 months of growth. Heavy decline in all major cryptocurrencies. Why it happened? Massive outflows from ETFs. Weakness in technical indicators. Short positioning by big players, macroeconomic factors, unwinding of leveraged trading. What should you do? Don't panic, diversify your portfolio. Only invest what you can afford to lose. Use dollar cost averaging strategy. Focus on fundamentals. Avoid FOMO. Stay updated. Looking ahead. Volatility could continue in the short term. Recovery is possible in the long term. Technology adoption and regulatory clarity will be key factors. My personal advice. Friends, I personally believe that crypto is a revolutionary technology, but it's still very young and volatile. If you want to invest, then 1. Do proper research. 2. Understand your risk appetite. 3. Maintain a long-term perspective. 4. Avoid emotional decisions. 5. Get professional financial advice if needed. Remember, the number one rule is don't invest more than you can afford to lose. Final thoughts. This crash may seem scary, but it hasn't happened for the first time in crypto history, and probably won't be the last time either. Those who remain patient, make informed decisions, and maintain long-term thinking generally perform better. So friends, I hope this video was informative and helpful for you. If you like this analysis, then don't forget to like. Share with your friends who are interested in crypto. Subscribe to the CCE Guru channel. Press the bell icon so you stay connected with all our updates. Tell me in the comment section below. Are you invested in crypto? What's your strategy regarding this crash? Oh, which cryptocurrencies do you believe in? And ask if you have any questions. I read every comment and try my best to reply. And yes, if you want me to make a detailed video on any specific crypto topic, let me know in the comments. Disclaimer. Friends, this video is purely for educational and informational purposes. This is not financial advice in any way. Cryptocurrency investment is very risky, and you could lose all your money. Before making any investment decision, do your own research. DYOR, do your own research. Assess your financial situation. Consult with a certified financial advisor if necessary. I'm only sharing information. The responsibility for your investment decisions is entirely your own. Remember, markets always go up and down. Those who stay informed, who remain patient, and who make smart decisions are the ones who succeed in the long term. The world of crypto is exciting, challenging, and definitely transformative. You just need to navigate it cautiously and wisely. See you in the next video with another interesting topic. Until then, stay safe, stay informed, and happy investing.